Good afternoon, everybody. Um, Thanks a lot, Arjun, and thanks a lot, Guru, for creating such wonderful sessions time and again. And after the uh, exhaustive deliberation by Mr. Anilesh and the intensive discussion by Mr. Torben Bunde, I think the only thing that is left for me is to clarify the food versus fuel debate. And as Mr. Torben Andrews Bunde said, that it's to be done and it must be done and we can do it. Yes, we can do it. But then we have to balance the food versus fuel ratio. So we should also, I mean, equal stress has to be given to the 2G processes, where Dr. Bunde excels in, that is converting these straws, or what we say as parali, uh, converting them into either biogas or ethanol. My topic is, how do we fund these enterprises? As Mr. Gillis was explaining very clearly that what are the government instruments that is available, including the interest subvention, and we have the 5% collateral plus 5% margin money. And then we have this oft repeated 20%. I'll come to my first slide, don't worry. I mean, uh, this is the amount that is mentioned over there is too big, and that's the money that is to be deployed that has not already been deployed. So we'll come to that. So what happens is there are many companies who do not even after there are companies who get qualified through the Department of Food and Public Distribution, and they get a LOI from the oil marketing companies, that is either Hindustan Petroleum Corporation Limited or Indian Oil Corporation Limited or Bharat Petroleum Corporation Limited. But even after that, they fail to get the complete funding, either through the 5% escrow, with or without the interest subvention, or the 20-80%. That is where we have set up a alternative investment platform where we try to help these entrepreneurs, established industries. They come from small, medium, and large industry segments to do a complete funding for them. Not only arrange the bridge funding, we do a complete project funding. And generally, we all our investors, they are most of the investors that we have are spread across the world. So what happens is we our stress is on the external commercial borrowing. So our interest rates are lower, but then there are certain qualification criteria. I'll go through the slide, guys. It's a routine thing. You can download the slide from my website, and that's pretty easy. But I'll just try to be quick, and since I'm the last speaker, and there will be a lot of questions that people wanted to ask. The main thing that we ask of the entrepreneur is what is their skin in the game, what is their contribution. And when we say margin money, let's say, for example, if X is the um, capital that is required for the project, we provide the whole of the X capital, provided the promoter has a LOI from the OMC, and the promoter is able to show at least 15 to 20% of X in his bank account. He doesn't have to contribute that money to the project, but he needs to park that money. He needs to have the proof of fund, and he needs to keep there till the operational date. So that gives the comfort to the investor that whatever the investor is, the investor will not invest X minus 0.15x or 0.20x. That is not, he will not invest 80% or 85%, he will invest 100%. But they want the promoter to also uh, park 15 to 20% of the project value of the money in their own bank account, in any bank, any Indian bank. So let's just quickly go through the slides, because while we cover the slides, I will also explain that this alternative investment platform that we explain, which is basically project funding based on special purpose vehicle. How does it come to? We have 300 plus man years of diverse, extensive financial experience. We have around 17 partners all over the world, and between them, we have billions of dollars of asset under management, and each of them have implemented huge projects globally. And yes, bank-wise, we have Lloyd's as one of our clients. We have Bank of America as one of our clients, and we have Capital One as one of our clients, and we also have Barclays as one of our clients. And for underwriters, yes, Lloyd's is there and Leopard Capital is there as underwriters. It depends on the region that we are operating in and depending on the project. Can we move to the next slide, please? As I was speaking, these are the clients. So primarily, we have been catering to the global market, and in Indian market, currently we are in negotiation for couple of compressed biogas projects and three solar projects and couple of ethanol projects. So all the negotiations are underway, and you will understand why when we say that the negotiations are underway, because there are documentation processes. Sometimes the
Sanjay
EC has
ji,
not identified. Yeah.
yeah, I think the mic is moving, so there is some disturbance when you are
Can you
speaking.
hear me properly now?
Yeah, yeah, now it's better. Now it's better.
Yeah. Sorry. Thank you. Thank you for pointing that out. So, as you can see, we have a list of highly qualified clients, but that doesn't make any difference. You see, MetLife or Dino or having Volkswagen or Bristol Myers as my client doesn't make any difference. This fund is called BioAngel ESG Paradise Fund. ESG stands for environmental social governance, and this fund is specifically meant for the energy sector of India. And whether it is we call it compressed biogas or we call it ethanol or you can call it liquid gold, these funds are dedicated for that. Can we go to the next slide, please? This explains we are backed by 5 US funders currently, but generally these numbers keep on increasing and decreasing. It's never like we have some people do have mergers and acquisitions, and some people do bifurcate and they go their different ways. So the numbers keep on. It's a dynamic entity, and we have around 3 European funders. We have 2 in Germany, 1 in Austria, 1 in Switzerland, and I think a couple of them are in UK also with us. And we also have 3 funders basically from GCC, and quite often they are pretty excited about some of our projects, and then they do their own due diligence and they have their, like when I said that for ethanol you need to have a 20% uh, proof of fund in your own account. That is not the only way that funds come in. There are different ways, and this is one of the ways which has been pretty much palatable, because in India, if we look at the fixed deposit rates, they are pretty high. So if we are asking a promoter to park some money, if it is 15% of the project in FD, and he doesn't have to remove that money till his operation starts, he doesn't have a problem with that, and he doesn't invest into the project, but that's for the investor's confidence. We also our sources of funding are institutional funding, ultra high net worth funding. We do have pension funds with us, and we do have endowment funds, and uh, some of our partners do participate in the small and mid cap programs for providing short, medium, long merit quality administrative roles. Can we go to the next slide, please? This is our global financing operation, and this is where our demographically we are spread. And we are not physically existing in all the places. We are primarily existing in India right now, and we have one of our VPs operating out of Birmingham, and we have a couple of associates operating out of Africa, and a couple of them out of Europe, and a couple of them out of USA. But we principally primarily concentrate on businesses in India right now. Next slide, please. These are the different industries. If you look at the countries and the industries and the different segments, like we are in solid waste management, we are in agriculture, we are in aerospace, and We are into, of course, energy management that I was discussing, and then we are into anything that has to do with mechanical production. Then we are also into pharmaceuticals. We are into, typically we encourage people, those who are into production of active pharmaceutical ingredients, and we also take care of real estate sector. So this is basically the industry spread. If anybody is interested, you can go through our website, and in our website there is something called as Project Essentials. Under the Project Essentials, we have covered in detail about each of the domain that we cater to and what are the specific requirement for each of the domain. And if we look at ethanol, since ethanol has a off-taker, and off-taker is government of India, so it is a very protected business. So getting funds, finding funds for this kind of a project is not a big deal, provided the entrepreneur has found the right EPC who is willing to give a performance bank guarantee, and they have the right operations and maintenance company who is willing to sign a service level agreement and service level guarantee. And these are English words which might sound very fancy, but they basically means that the EPC is assuring you that for every money you pay them to build the factory for them, for you, they will either conform to the standard, quality standard, or they, if they do not conform, they will pay a penalty for it. And after the factory is done and when the production starts, your O&M, whenever they have they are maintaining the plant on your behalf, they will conform to certain production standards, certain quality standards, or they'll pay a penalty for that. Let's move to
Sanjay
the
ji,
next slide. Huh.
we'll have to wrap up in another
Yeah,
3 to 4 minutes.
wrap it
We
up
have a lot
quickly.
of questions. Yeah, yeah.
These are basically these are few institutions which we are talking, which help us while doing our advisory, and we can skip that. In India, we have a different set of institutions. Please go to the next slide. Yeah, this is something which is pretty important. I want all of you to understand the two methods that we discussed, that has interest subvention, whether it is 5% collateral and 5% margin money with a escrow account, or it is 80/20. Both of them are corporate funding. In that, you are getting a term loan and a working capital. In this special purpose project funding, you are getting, this is the right side, that is where you can, any new company, a startup can be funded. You don't need to have a turnover to get funds for these kind of projects. Please move to the next slide. So as I said, this is off balance sheet. You might have a balance sheet which is 100 crores or 500 crores or 1 crore or 1000 rupees. It doesn't matter. If you have a good off taker, you have a good EPC. EPC means engineering, procurement and construction. The companies which will going to build the plant for you. And if you have the right kind of feedstock provider, that is, if your feedstock is rice straw, then you should have the right amount of rice straw. If it is sugarcane, or if it is any mixture of biomass. Then this is a well developed deciding mechanism. This is all English. Let's move to the next slide. And this is a non-recourse. Yeah, I need to explain what is a non-recourse financing. The project itself is the collateral. Now, if the project fails, that means that's it. The project failed. The owner doesn't have to place any of his personal belongings as a part of collateral for this project. So basically, what the investor does is they use a insurance agency. They use their actuaries to underwrite these loans. So if the project fails, it is the insurance company who pays for the cost of the loan. Okay, this is little bit explaining how this protective mechanism of project funding works. If anybody wants to understand this in greater detail, then you can write a mail to me, and I think you can write a mail to Guru, and Guru can share my contacts. Or if you're sharing all our contacts at the end of the presentation, it's great for us. Or maybe in the last slide, you will find my mobile number and my contacts. Let's move to the next one. Yeah. So if all of you look very clearly at the slide, all these things, this slide is available on my website. So This whole presentation is available on my website. So all the components, the center asset is the promoter and his plant, and all the components that is around the asset are the requirement which collectively carry the risk of the whole project. So if it succeeds, everybody succeeds. If it fails, everybody fails. Let's move to the next slide. Okay, as I was telling you, these are the different segments that we look into. But since currently today our main stress is on ethanol, so we will stick to that. This slide is available in Project Essentials first item on the menu. People who are interested, they can go there and download it. Move to the next slide, please. These are the essential evaluation procedures, and most of the evaluation procedures are same like the bank. Only thing is we don't ask you to bring gold or land as collateral to be placed for this project. The project which we are building is the collateral for the project. I mean, for the money that is being lent for the project. And the rest are few other these are all typically all the investors, they follow the banking principles. So most of the documents that we require is the documents which the banks also require. Next slide, please. This is something which these are some things which are pretty essential when we conduct a due diligence, and I will discuss it on a case to case basis, because if I start explaining what is a discounted cash flow and what is net asset value, or what is a comparable company's model,
Sanjay, that will be an entire session on VC funding then.
yeah, let's not get into that. So let's go to the next slide. Repeat. So fine. If we miss out something, we go and repeat. Let's go to the next slide, please. Okay, so this is some Sarbanes-Oxley. Please don't get confused. These are all words which are supposed to be there for your accounts department to understand. So promoters need not get confused with this slide. Please go to the next slide. So as I was telling, if this, just remember that if you have 15% of the collateral, if you can place that collateral, I mean 15% of the investment as margin money, if you can place it in your account in your bank, then yes, investor will be willing. There are some investors who do evaluate promoters who do not have this margin money. But quite honestly, I'm yet to see some real funding happening in that speed. I mean, there's a lot of talk, but funds don't come in. Every promoter always wants to see what is the every investor always wants to see what is the promoter's skin in the game. So let's go to the next slide, please.
Yeah, I think we have reached to the end of the session. This is where we'll be sharing the details of all the speakers. Sanjay ji, thanks for this session, and also anybody who is interested in looking at so it's I mean, there is no dearth of plants as of today. One question to Dr. Sanjay. What about the bank loans? Will it be available for even the newly formed companies? Dr. Sanjay, you're on mute.
Since our funding is off balance sheet, so we do not differentiate between startup companies or companies with having good balance sheet. Only thing they should have is all of you will have the same LOI. They should have a good EPC. Their engineering procurement company should have implemented couple of projects before. That's it. And they should have arrangement with the cooperative for the feedstock, whatever feedstock they're choosing.
Right. And also